You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Good afternoon, traders and Quasar Markets Live, and good afternoon to our trading mindset coach, Agnieszka Wood. Agnieszka, how are you doing today?
Good morning or good afternoon. I'm very well. How are you, Howard?
I'm doing great. Markets are up nicely. You know, two things I've got to ask you, or what I've been dealing with all day, is fighting off everyone's FOMO. As you know, the markets are, news is good. Everybody is exuberant. Weekend had lots of good news on US, China. The president spoke and it didn't talk down the markets too much, sort of stopped them from going up. What are you seeing out there? And, how do you advise your students, right now in this type of time?
Yeah, I think it's really started yesterday, right? When you started seeing the futures up and the Eureka finally, and it's almost like this, there was so much pressure. What is going to happen? Of course, China, big thing. So it almost came like this something that off our shoulders, right? Oh, okay, relief. And I think that the first reaction when some pressure comes off your shoulder is, okay, now we can go, right? And that gives you that moment of, all right, so we have a green light to start buying, right? And now is everything going to go up? And then what I saw, like I actually started already sort of talking to my students, make a plan for tomorrow, because the market is already up. It's going to most likely be up tomorrow, but what is your plan? Like, how are you going to come into the market? And most people come into the market with the thought of, it's up, it's going to go up, because now we have this good news, so it's just going to continue. And that urge to follow that, yes, there is a little bit of greed, but also that release of the stress. And now if I have been losing, I have the chance to make my money back. So there's a lot of things playing at the background.
That was the second question, as you know, that I think I was going to bring up, is that, one of the things I've been talking to people about today is, hey, because they're like, listen, I've been sitting on my hands for the last month and now I'm ready. And I'm like, that's great. Make sure the same setup that you would have made sure a month ago was the setup. Your A plus setup, as you call it, is an A plus setup and not a C setup. And, just because you've been sitting on the sidelines, it doesn't mean you trade 2 or 3 times as much, or just as importantly, with 2 or 3 times the size, right?
Right. And I think this is exactly what you said. It's like, and now I'm ready. It's like, that's great, but it doesn't mean the market is ready, or that everything is ready exactly at the time that you are ready. Those things have to be coordinated. They all have to align, and your timing has to be aligned with the market. And if you come to the market with this idea, and this comes, on days like today, but also when people have a limited time, right? For example, they have a full-time job or they want to do something in the afternoon. A lot of times they will come into the market like, okay, I'm going to make money. And I have about 2 hours, which has to happen. So I'm ready, bring it on. And then they start trading without the setup, without the plan, just because they are ready. And I like to compare the market to an ATM, because it is a sort of an ATM. We come in and we take money out of the wall, right, of the computer, so to say. Yep. And it's that easy, you could say. It's pretty easy, right? As long as you do the right thing, you put the right PIN code, the combination that it's working. You take the money out of the ATM. However, if you do not have that right combination, you're not going to get a cent out of the market. And now that combination is a combination of your strategy, your setup, your mental state, the market. There's a lot of things that have to be aligned for that combination to work. And it's not necessarily just because you showed up, I'm here, that suddenly the
Right.
money is
And
in the store.
the other thing
Right.
I'll point out is while we had this big jump up, as I've been stressing for weeks, we're not set for a V-shaped recovery. We're set for more of a U-shaped recovery, and there'll
Right.
be ebbs and flows to it, and to play them. Personally, I thought we would see animal spirits come throughout the day with that, great pre-market, but I made it clear when we started this morning on Quasar Markets before the open that I had already trimmed my positions, taken profit, and was sort of neutral off of my weekend,
Yeah.
trade, because I just wanted to, I didn't know, I was willing to give up some points. And, it's something that I
Yeah.
think I also try to stress to everybody. I had a great run. I was in a levered MSTR product and a levered and NVIDIA product. So they had already done the move. I didn't need to be greedy. I took my profits. I'll sit on my cash. I was looking to redeploy it. We're not quite there yet, so I'll wait.
And it's very logical that to trim your positions at the beginning, because how many times in the last few months it happened that there was a big gap up and it
Yeah,
just
I don't trust the algos personally. That's what hits, first thing in the morning, and I'm like, man, I just don't know what these algos are going to try to do, and do they try to catch us? And then the other part for me, I looked at it a little bit more macro, being a Bitcoin guy. And Bitcoin held up over the weekend and into that pre-market money, and I said to myself, well, no one's moving out of crypto into this big move up. So to me, it also showed that's going to happen. So, and now it sort of has played out this morning as we saw it pull back to like 102 from that
right.
105 area. So when I didn't see that, it also had my going, wait a second, not everything's lining up the way it should.
Yeah, I think that the biggest part of it is the whole overthinking thing, right? That people, instead of watching the market and what's actually happening, I hear a lot is, and I thought that it's going to continue. I thought this is going to happen. Like, okay, you thought that, but you might think a lot of things. Doesn't mean it's going to happen. So if you thought that, like, did you actually play the setup? Because yes, it's good to have thesis. It's good to have theory. That's what we make, thesis, right? When you make a plan,
Right.
it's a
Absolutely.
thesis. We don't know if it's going to work like that. But still, your setup is part of that code for the ATM. So you cannot just go on, I thought, and then jump in, because that's not going to be good. And then
No, not at all. I mean, if you don't have your plan in place when, the inevitable tweet comes out, you won't be prepared to handle it.
Yeah, and then you start over trading because, of course, you get annoyed, you get stopped out, and you're like, oh, and now it's going up, and you start over trading. And just think about it, ATM again. If you put the PIN code 2 times, the third time before you put it in again, right, the same way, you think, because you know that if the third time is wrong, they're going to lock you out, right?
Absolutely. You're
So
right.
you might go, like, if you're like, okay, I'm going to try twice, and you're like, let me go and actually check what that code was, right?
Yeah.
Or where did I write it down? Or whatever you do, right? Maybe let me just reset the password, because you don't want to be locked out. So in trading, very different. Like, let me try 1, 2, 3, 4, 5. I mean, I know myself, like, I used to take like 40 trades a day just to try, and that didn't lead to anything good. But I think just thinking about from the very beginning, to start with the day, thinking about how do I want to feel about myself and about myself as a trader, about myself, about my trading in general at the end of the day. Like, how do I want to feel, and really care about that, So instead of coming here, it's like, oh, let me just make some money. That is like, if you start with that, you're going to have filter in front of your eyes and never really good make decisions.
Yeah. You hit on another section that I've noticed in the trading world that I'm not a huge fan of too, is when people are trying to pin things into a certain time frame. They see a thing on TV that says, you can trade between 9 and 10 and be done and blah, blah, blah. That person can, some people can. For other people, that might not be the right way. Again, I'm not a big proponent of spending 8 hours in front of your screens, but it isn't always line up to the same time every day.
Right. Well, if you only have 2 hours, like if you say, okay, after 11 o'clock, I have to go to work, if you're on the West Coast, or Well, that might very well be, but do not assume that within the time you are in front of your computer, there is going to be a trade. It's
Right.
completely fine if you say, I only have 2 hours a day, that's fine, but your assumption cannot be the trade will be there just because I'm here.
Yeah, you just nailed it. It isn't like the movie Field of Dreams where they said if you build it, they will come. When it comes to the world of trading, again, we want to make sure it's the right setup. That you don't want to rush something, you don't want to change something. Do you find that as that traders for you that light sort of goes off with them one day? Because I've noticed that sometimes, and for me it did, where it said, "Hey, more is not better."
Definitely, and I think that the light really that really hits when we start going through all those major mindset shifts, so major concepts, what does not work in trading, that people suddenly realize, like, oh, holy crap, there's actually more to it than I thought when I got in. It is not just, me clicking buttons. In fact, clicking buttons is not even trading. This is just, being an operator and clicking buttons.
Right.
Trading is just so much more. And it really takes more than just showing up and opening your platform. That does not make you a trader. And yeah, definitely, there is parts of the development as a trader where you realize that it's a career and it's a business, and you got to take it seriously. It's actually funny enough. Last week, I had someone who I had a conversation with who wants to start trading, and it's just at the very beginning of his career as a trader, like kind of thinking to switch to trading. And it was just so interesting because, I wanted to give a very realistic view and without discouraging anyone, but in fact, I kind of wanted to discourage him because just to be realistic, but I almost heard that this, no matter what I would say, that there is part of that there was this part of him that said, well, I still want to do it. I still want to, I'm going to try it anyway. And I think that every single trader has it to a certain extent, like trying to learn on their own mistakes and not really
Right.
listening, because the information is there, right? Everyone is telling you need to be disciplined, you need to be this. It's like, oh yeah, well, and I've been arrogant like that myself. It's like, yeah, I'll be different. Yeah, I'm successful everywhere. So, and like I didn't listen. And then you have to learn the hard way. So I think there is probably that, the learning curve where you finally realize, yeah, I should have listened before. And unfortunately,
Right.
there's still, every single trader goes through that. And I don't know if it will ever end, if people will go by themselves. It's like, yeah, maybe I can actually shorten the learning curve here and take some of those lessons and do it well.
Yeah, I've always
I
it's
don't
like
know. I
that
hope so.
commercial for the kid that says he's learned everything there is to know about martial arts because he was watching YouTube videos and his dad's like, I don't think that's how that works. But the kid's like, oh no, that's how it works. That's how I feel it is with certain traders that I've dealt with in the past. Same thing where they tell me they've had inconsistent results, that they have lost money in times when they shouldn't have, and that they do this. And then when you give them sort of some guidelines that they should maybe look at to improve their overall, habits and the way that they're trading. No, I have it right. The market was wrong, right? Is that how
Right,
many times a
right,
day do you hear that the market was wrong? I would have to ask.
right. A lot of times, and I think that's such a very human thing to do, right? Because we are not used to making mistakes. We don't want to make mistakes. I mean, traders in general are very ambitious people. They
Right. Well, and you brought up, I know on your last podcast, I believe, change is scary, right?
Yeah, absolutely, because changes really create that resistance, like everything that
That's
is
what it is.
different.
That's what I mean is I'll talk to
Yeah,
this person and they'll tell, we'll go through it and I'll say, maybe, this is what I'm doing to be successful right now. And this, yeah, you're right. Yeah, you're right. Yeah, you're right. Have you thought about incorporating, this or that into yours? No, no, no. Well,
yeah, yeah.
it's sort
And that's a human nature. We are basically programmed to repeat patterns and to repeat our old behaviors, no matter how uncomfortable they are, instead of changing, because we fall into those patterns and just repeat them. So anything that you are trying to change comes with resistance. So that is just your natural behavior. That's why it's also so difficult for traders to pivot when the trade is going not in the direction. It's to pivot, just to admit it, I'm wrong, get out, and maybe even switch the direction, right?
Right.
They will
Oh,
stay
yeah.
in it and fight for their life to prove that this trade is still going to work.
Yeah.
And,
No,
and that's a very natural thing to do. Fight for it. Just fight for it. Just, just don't admit you're wrong, and it's going to work one or the other way. We have to find a solution. The thing is that in trading, there is no solution to find. Because
right.
there is no problem. That's the whole thing. Like when you are in a trade and it's not going in your direction, it is not a problem. And because it's not a problem, it doesn't need a solution. We make it a problem because we say it's not working. But the whole point of it is, for trading, it's not a problem because it is normal that things are not working and some things are working. So it is just a normal state of affairs.
Absolutely.
But we make it a problem. We say it's not working, so it's a problem, and I'm going to fix it. And that's where the whole thing starts. I'm going to be the one who is going to find a solution for this problem, completely ignoring the fact that this is not a problem.
Yeah, it's the market. It's how it works.
Yes, exactly. And that's what triggers this whole, behaviors in us, and trying to find a solution, because we are not quitters. So we will try to find a solution no matter how much it will hurt us.
Right. Yeah, no, absolutely. We see it all the time at the traders that will say that, no, this time it's going to be different. That's when I'm like, oh, here we go. Why is it going to be different? What did you change? Did you change your goals? Did you change the way you make your trading decisions? Did you, what did you change that's doing it? Do you find that traders sometimes I find that they have trouble taking responsibility, I think, for their own actions and for their trading actions.
Yeah. But again, I don't think it's because they don't want to. I think this is just a kind of a habit of not taking responsibility. And it starts with one major shift, is to understand and to really take it in, that in order to create something that you want and be in control of your life, you got to take the responsibility for the outcome. And in order to do that, you have to take responsibility for your actions.
Right.
But most people don't take that responsibility, and that's why they complain about the results. And then they say, it kind of gives them the free way to complain, because if it's not my responsibility, what can I do? And that's why nothing is changing, because we can only change something if we take a responsibility for it. If we say, no, this is in my control. The fact that this result, which hurt me, is like this, is because I did something. And look at yourself and say, this is what I did. And because this is how I did this, now I can do it different and have a different result. But as you say, this comes with responsibility.
Yep, absolutely. And the other part of it is that then they also, when we say, sometimes you can't fix it. In other words, that sometimes stocks don't recover. Sometimes if you were long and it goes short longer than you can stay long. There actually is. It doesn't necessarily, I think that's another thing that people, I find now, and especially as we've had these nice pumps and this, what I would call is a bullish move in a bear market, is that they say, I bought NVIDIA at 155 and it's going there, I know it. Well, maybe it's not, maybe it is, we don't know that yet until the market sort of makes its move. Do I think it will on that one? Yes, I do. But there are a lot of other stocks that maybe I don't think will ever hit the highs they had previously,
Right. And even if it does, like, when does this going to happen? And it doesn't make sense for you to have.
Do you wait 3 years for it to happen? Yeah. Are you going to wait 3 years for what, stock XYZ to recover when you could have remade that money 7 times?
Right.
I didn't tell you this one. I saw one of the funniest. This guy won the text of the year so far that I've seen, or the tweet of the year. He pointed out that the SPY was at 58.81, and today was at 58.81. And the 10-year was at 4.43 on January 1, rather. It was at 58.11 and 4.43, and this morning is at the same place. Boring year, yawn, yawn. And I was like, man, that is he wins. That's funny. I mean, if I told you that today, if I told you that before, because I sort of surprised you with it, are you surprised to hear that that's exactly where we're at? Literally, the 10 years exactly where we were January 1st, and the spies back then.
Yeah, but look how much happened in between.
Yeah,
And
I mean, if
you could have
yeah,
just waited and do nothing, or you could have monopolized on all that, capitalized on all those
exactly. Yeah,
opportunities.
you either traded January 1, the SPY, you went long, and you were able to get back to even today
Right.
on May 12th, or you've made 5 or 6 trades from there because you allowed yourself to take a small loss, and hopefully you got to regain it on the way up now.
Right. And I think what you said about fixing. I think this is where the responsibility comes in, and this is where the focus comes in. Most traders that struggle will focus on the outside of themselves, right? They will focus on fixing that stock. Like the stock, the price needs to go up, and they keep looking at that and like, how can I fix it? Maybe I can add something. Like, how can I fix that fact that the stock is down, right? And I'm somewhere
Right.
up there. It's not, you don't have to fix the price. You don't have to fix anything on that side. The fixing is why you're still in it.
Right.
The fixing
Absolutely.
is like, what is your plan? How long are you going to be in it? And what is your plan while you are in there for so long, still trying to fix the problem on the outside, which has never been a problem. The problem is on the inside because you're still in it and you shouldn't have. So until that switch and that awareness comes in that it's never on the outside, but it is on the inside, that's why a lot of times you're in trouble. This is going to keep happening.
Yeah.
Because the stocks will always go up and down.
Yeah, and then the other part is I think people need to spend more time looking at it and understanding the cost of holding money in a trade.
Right.
That is a cost. There's a true cost to that.
Absolutely.
If like I said, if you're waiting 5 months to break even, was that a good allocation of your money? Because inflation moves, we all know, even on the lowest side at 2.5%, right? So you actually lost money during that.
Right. But I don't think anyone really thinks about it because they're so absorbed by the loss that they're having and how they're gonna.
Well, it's not true. You know who does? The 14% of retail traders that make money and stay in it long term, right? I mean, I don't like to make light of it, but it really is. It's the difference between the people that I talk to, like Big Beat, like yourself, like Steve Flanagan, that are longtime traders that have been doing this for a long time. You guys all have one thing in common. You do understand that. That there's a cost of holding your money in the market, and it might not be the best way. Steve talks about a Big Beat. Sometimes he's cash heavy, sometimes he's gold heavy, sometimes he's crypto heavy, sometimes he's stock heavy, sometimes he's whatever heavy. But there's a cost of holding that money, and you don't want to see it just get eaten up. By inflation.
And I think there are different strategies. I mean, if you're a long-term investor, you might want to sit through a pullback in the market.
Absolutely.
But I always get that kind of weird feeling, like if I know I had this fantastic profit and I can get out, and then it might not pull back, but if it sets up, I can go back in. But most of the time after the run that it had, it does pull back, and then it makes me feel good about myself that I am out.
Yeah, for me, exactly like you said, even if it goes against me a little bit and it continues to go up, I was doing that with my Bitcoin swing trade, if you remember, and I didn't get back, I sold on the thing, and now I'm still holding that little bit of money that I'm waiting for a pullback. I'll wait, but I think you get enough satisfaction, at least I get enough satisfaction from that win that it holds me over till the next entry.
Right. I get incredible satisfaction from having really good entries and having entries that give me the best risk reward. This is like, I literally take pride in those,
Exactly. I will and that's what I want to have,
chart and reinforce it for myself, because that prevents me from chasing. When I am like, this entry was so good and I know I can get those. And even with Tesla, it was high up there. I drew things on my chart, like trend lines and stuff. And I'm like, I think this would be a nice level. I think what was it, 202 or something. And at that time, it didn't look like it's ever gonna get there.
Right. Oh yeah.
And guess
And then when
what?
it did get there, it didn't look like it was ever going to bounce. You thought 200 meant it was going to
Exactly. It's
150.
like, well, that was actually still opportunistic. I can get it much better price.
Right. No, I
So,
mean,
so
that's
yeah,
exactly it. It's funny. I had to stop myself even because, like I said, I took my money off in the pre-market and one of them's come down and I was getting ready to go back into it. And I said, wait a second. I'm looking at my chart and I'm like, it's not at the entry for the chart. It's just not. Yes, it's lower than I sold at, but it still has room to the downside. And if I'm wrong and it goes up, then I'll miss. But that's not the setup. The setup's not there yet. I'm going to
so
wait.
good what you just said, because it's lower when you sold it. And I think that might be one of the things that kind of, it sticks in that level where you sold it, it sticks in your head, and that becomes your new reference point. You know what I mean?
Right.
It's like,
Yeah.
for many people, it's like, oh yeah, but it's cheaper than I sold it. Yeah, but is it the
But
right?
is it at a good level for a buy? Those are two different
Right.
statements and two different places on the chart, quite frankly. Yeah, and it's not $100 I'm looking for it to drop like we were with Tesla. But $5 on a $400 stock, if I do that every time, it adds
Absolutely.
up. It's and like I said, and I'm one of those traders in general who, I'll miss the first of the move, I'll miss the last of the move. I want the body of the move is going to be enough for me. And I tend to trade it that way. So I'll do it. I think that's the key, is that if you have a style that or you have theses that you continue with them. And because that's when I know I lose. When I lose is when I try to get too tricky. When I try to not do that, where I say, okay, I'm going to catch this knife. Nope, I didn't catch a knife. It just caught me.
Right.
And that's when I do it. Because it isn't my style. I'm good at noticing when it's made the reversal. Not necessarily like I'm good at picking levels when it will, but my big strength is, okay, the reversals come. This is when to do it and get out before it trades, before it, makes its mean reversion from there. So, if you stick to that, there's enough profit to be made. We've all talked about it, right? It's more important to really manage your portfolio and to conserve your allocation and so forth than it is to win every trade.
Absolutely. I mean, you don't need to win every battle to win the war, right?
Absolutely.
It's a strategy, and you need to conserve your capital, emotional, monetary, and preserve your energy, so to say, for a long term.
You just hit on a big one that people don't talk enough about, is you only have so much emotional energy. When you're a trader, we run on adrenaline, right? A lot of times, and
adrenaline and dopamines, cortisol, like all those chemicals are already running you empty, basically. And I think what people don't realize is that every time when you are actually in a trade, you are using some of that capital, and it's not endless. And if you don't replenish it in between the trades, your performance decreases. So if you are spending your capital on some random trades without a plan, finally, when that good setup comes and you finally take that setup, you might not have the emotional capital to actually be able to wait until your target, and now you cut yourself short. So I try always to decrease the amount of time that I'm in a trade.
Right.
Because I know it costs me energy, right? Not that I feel it, but I know my brain feels it. I know my body feels it, because anytime there is money at stake, no matter how much, there is some sort of, elevated state of arousal for your nervous system. So you got to really be aware of that you are exposing yourself to those G-forces, as I call them, of the market.
Absolutely.
Right. And that is not unlimited. So if you're like sitting here for 8 hours and then still hope to perform, well, good luck.
Absolutely. And again, that's when I've seen I made too many mistakes over the years when I was tired and should have been done trading for the day. I'll just do one more. I'll just do one more. And those always tended to be the losers. I think you brought it up about your trading. You realized that whenever you traded into the afternoon, it was not a good idea, right?
I would always give money back. What I made in the morning, I would give it back in the afternoon.
Yeah, there's
was
no
so
reason to do
pointless.
that.
Yeah,
Absolutely.
it's like, and that's one thing also. Like when you look at the time that you trade, no matter how much time you have, just take your stats, go over your stats, and see when is it that you are the most effective,
Yeah,
and when is your setup showing up, so that you can actually make your routine, make your trading based on what's there and not what you think. Oh, now I have time to trade. It's like, that's
that's not how
great.
it works, right? Now you can say I only have those times to look at the market, and that's fine. That I'm okay
If you
with.
can
But
just look at the
understand,
market,
yeah, absolutely.
you can
Well,
get
Agnieszka,
yourself
I know
away from
you.
trading.
Yeah, it's a hard thing to do to take that away. Agnieszka, I know you're a very busy woman and we've been monopolizing a lot of your time. So thank you so much. Any last words for us today?
Yes, I want to hit back on what you said about, being your own reference point. I think this is really important for everyone. If you want to real freedom, if you want to trade for a living and long term, be your own reference point. So really look at yourself, not what others are doing. Even like the trading tips. People sometimes say, "Oh, I'm going to go long this stock." You never know, where are they going to go long, how much, what's the risk, what's their hedging strategy. Just
Exactly.
focus on your own plan. You'll be so much more confident if you just focus on your own trading. Even when it feels uncomfortable at first, you will get used to it, and because it feels uncomfortable, you will put more work into it, and it will pay back much more than just simply following someone without even making your own decisions and plans.
Absolutely. I couldn't have said it better. So thank you so much, Agnieszka. We'll see you again on Wednesday.
Thank you
Everybody
so much,
have a
Howard. I appreciate
fantastic
you guys.
trading day. We are back at 1 p.m. with Market Minds with the boys from Prosper Trading Academy.